Morning, everyone. I hope you're all doing good. Early morning. We are starting with the very important topic for cost and management accounting. But before we do that, we'll be interacting with you guys in some of the sessions in the coming weeks. So let me introduce myself with all of you. I'm Anubhav Verma. Uh, have been into training for almost last 16 years. Uh, you guys would be interacting with me in some important topics of costing and FM. And Apart from the teaching, for which I'm very passionate about, I've got some corporate experience. Also, I've worked in companies like KPMG, Whirlpool, EXL Services, and I have been associate professor with a couple of colleges in Delhi. So I welcome you all, and I'm sure each and every one of you are equally excited in terms of what we are heading towards to. So today is basically what we are talking about is kind of a foundation of cost and management accounting, because when we talk about the cost of a particular product, there are three things we generally talk about. So why don't we start the session with more of a you know ball in your court in terms of, let me ask this question from those of you who are present right now, is when we talk about a cost of a particular product or anything. Let's say I have this remote in my hand. When I talk about the cost, what are the most important ingredients of the cost? So let's see who all reply on the query panel. So when we talk about the cost, what exactly we are looking at? I know you guys are aware of the answer. Let me just quickly check how many of you are active right now. I can just give a hint. We are talking about three important components over there. Waiting for some answers. I'm again repeating the question. When we are talking about the cost of any product, what are the three important ingredients of the cost we are looking at? Okay. Getting first answer from Pratima. Pratima says raw material, labor, and also getting from Shank as material, labor, and other expenses. Very nice. I think, as I said, I was pretty much sure that you guys know the answer. And for setting this foundation, it's important to know that piece that we are looking towards, we're heading towards material, labor, and we can call other expenses as overheads, right? Uh, so within the material, labor, and other expenses, we are talking about certain important aspects like direct material, direct labor, indirect labor. So we'll be talking about a lot of these stuff today as well as a day after tomorrow, where we'll be talking about labor though. But I would like to share a very interesting example from when I studied costing for the very first time back in 2002. I'm talking about 22 years ago. Very interesting example our teacher then shared with us in the class. And let me ask you that same question, because I'm sure you guys will then pretty much understand for a lifetime what are the basic differences between something like even a direct material or indirect material. So before I even go into the technicalities, let me ask this question, guys. So let's imagine that in a typical household in the kitchen, there is a lady, let's say a daughter-in-law for that matter, is about to prepare an Indian dish called khichdi, right? I'm sure many of you would have uh, heard about that. I'm pretty sure. Uh, Something that eases out or soothes out your stomach. So she's about to prepare a khichdi. So what she does is she picks up a couple of jars. In couple of jars, there is a rice and a pulse. What we call it as a chawal and dal, right? So what is this, guys? Let me ask this question to you all. Is rice and pulse for that product, that dish called khichdi, is it a direct material or is it an indirect material? That's my question. Is it a direct material or indirect material? It's a very basic question, but there's something else coming up for you guys. Uh, Pratima says direct material. Very nice. On the Zoom also I'm getting an answer. Direct material. Very nice. Okay. Then she does is she picks up a bit of oil and a bit of spices. Is that a direct material or indirect material? Let's say about spices. Zira, salt. So we are not having a cookery class here. Don't worry about that. We are definitely learning costing today. Shank says indirect material. There are a lot of people coming up on the query panel now. Tamanna, Shrisha, everyone is saying direct material. So I think with the spices, I think what we need to understand is, are these spices pretty much directly associated with only specific dishes, or are they being used for different dishes, right? Accordingly, it could be direct or indirect material. Okay, but what happened as soon as she was about to open the oil bottle, someone came from behind. Who can enter into a kitchen when a daughter-in-law is cooking? Of course, answer is mother-in-law. And she got nervous and the oil bottle fell down on the floor. Hmm. Now the oil bottle fell down on the floor and she suddenly got nervous. She went back the, to the backyard and she brought a broom, right? A jhadu or what do you call a cleaning material. Now what is that pocha called? So for cleaning purposes, is that a direct material or indirect material? That's the final question, guys, of that example. The cleaning materials, we call it as a broom, we call it as a pocha. Is it a direct material or indirect material? Think before you respond. Okay, I'm getting some responses in the query panel as indirect material. Anyone here on the Zoom? Hmm. I think this was the exact way question was asked to us back in 2002. Question was asked Pratima, Tamanna, that, is that cleaning material a direct material or indirect material? And everyone shouted, everyone got excited that it is indirect material. But then the cross question is, does the cleaning material get into the preparation of khichdi? Yes or no? And if the answer is no, how can it be a material in fact? It's overhead, right? It's other expenses. It's not even a material. My question is not right. Everyone with me on this? So that example for lifetime, for me at least, always have those memories. I'm sharing that example after 22 years today, but I'm sure you are agreeing with me that we're talking about material and something which is gets into the making of a product, guys. Labor is something who is involved in making that product either directly or indirectly. But then there are other expenses. So those are overheads. So that's the discussion around it, guys. So let's kind of a deep dive into a bit of material cost here. So what we will be discussing on a broader perspective, we'll be looking at procurement side of it. you know, of course, there is a step before the procurement, how it is concluded that material is needed first of all, right? We'll be understanding that business process. If material is needed, how do we go about the procurement? What happens in the industry these days? When you receive the material, what is the responsibility of the storekeeper? Of course, it is from the perspective of storage, from the perspective of issuance, from handling of the returns. Then we also talk about the situations in terms of the inventory control, whether we are looking at inventory levels or we are looking at inventory issues also. We'll also understand what happens in case there are any losses, how the materials are consumed, how they're issued to the production. So from the very scratch, we will be kind of covering a bit of the material process here. And I'm sure, let's quickly want to double check with all of you who are here, on the Zoom or watching live on YouTube, wherever you are. Uh, you can confirm on the query panel as well. So many of you have come to today's session after at least going through the material chapter once, reading once, getting a bit idea about what we are into. Because what I'm telling you is for better benefit of these sessions, guys, and I'm talking about for even for the sessions that will be coming up for you all, it is always advisable that you at least read the chapter, try to get through some illustrations before you even are present in these sessions, because that will, I think, kind of cement your understanding of the topic, guys. But when we are like not sure of anything, we are here in the session, even that is fine. But then you are using the session for understanding the concept. After that, you are going back, reading the chapter from the study material, doing some practice. So it's like a different direction, right? So I hope you are with me on this. So anyone who want to confirm on the query panel that yes, you have gone through a bit of it, or probably the entire chapter before you are here. If not, heavens will not fall. That's okay. It's just that I'm just giving an advice for how you should approach these sessions. If you get a good idea beforehand, you can always use these to your advantage. No worries, guys. So, as I said, the classification is very important. When we talk about the material, we are looking at direct material or indirect material. So let's say I was talking about this example is just in my hands. We are talking about, let's say, a simple remote control here. So this is your screen. There are small buttons which can, either it is television or AC, whatever. So if I'm into manufacturing of this remote control, any material that is directly attributable, that's the key word here, directly attributable to the end product. I want to understand from you guys now, for this remote control, what could be a direct material? What could be a direct material, guys? And we need to be very responsive here. Want responses. I'm sure you guys are pretty much excited as I am. So can anyone give me some examples here? What can be into uh, categorically called as a direct material when we are looking at manufacturing of a remote control? Let's see what are the responses I'm getting. Plastic, very nice, Pratima. Super. Plastic, rubber, wire. It could be anything like inert material if some generic material being used in terms of the fluid, right? So material which is directly attributable to that particular product is direct material, and if something which is not directly attributable to that particular product is indirect material. At the end of the day, we are talking about, remember, material, labor, and overhead, right, as the three elements of the cost. And when we talk about the from a control perspective, please understand this. These are the three terms we will be discussing even in our subsequent sessions for labor and for other expenses. The principle of three E's, very, very important here. We will be always discussing about the handling of the material with the ultimate objective of economy in cost, efficiency with how they are consumed, and effectiveness in terms of the output they produce, guys. So this is always very important in terms of the overall control of the cost. In financial management, you guys will be studying something called working capital management. There also we will be discussing all this. So I hope everyone is clear on the direct or indirect material, guys. Please make sure if you have any doubts at any stage, please feel free to put down your query either on the query panel or on the chat box here. Okay, so let's start a little bit on the material control part. What could be the objective of a material control? Why it is important for us control the material usage? What do you think, guys? It involves cost, of course. We want to minimize the cost. That's the ultimate objective. But behind that ultimate objective, we are talking about few others. For example, we are looking at minimizing the interruption in the production process. Now, this is very important because you would want continuity. A lot of things are dependent on the material control in terms of how the production flow is planned, and there is continuous supply of materials as and when they are required. Of course, optimization of material cost is also very important. That would be either by the way of having a check on the wastages or on the perspective of from where it is ordered, right? So that is definitely in the in the entire game plan. Then we are looking at reduction in the wastages, guys. Reduction in the wastages. Now, as I said earlier, in terms of the reduction in the wastage, we are talking about any unnecessary loss or wastage that could result in a deterioration of the overall quality. That is something should be avoided. Now, there are different ways to look at it. Are we talking about a production process? Are we talking about a use of a better material, better quality material? And we will touch base on this when we will be talking about the procurement piece, guys. Now, one more important objective of material control is something called adequate information. Now, when I say adequate information, I'm looking at more from a perspective of coordination amongst different departments. So let me ask you guys, what do you think from a material perspective? Which are the departments that are generally involved? I want to understand from your imagination, what are the different departments that are involved here, guys? This is a question for everyone, so humble request, please answer this. What are the different departments that may be involved in terms of the information flow, in terms of the information requirements, coordination? Pratima, Shank, anyone? Aryan, any thoughts? Okay, so Pratima says purchase department, Kiran says sales. Okay, so we're talking about so Pratima, I'm just kind of rephrasing that in terms of the requirement of terminology we might use as a procurement department. Kiran says sales department, some responses on the query panel as well from Tamanna, who says production department. Sankaran says purchase, store, production. Yeah, I think what we are looking at here is, from the top to bottom, we are looking at, okay, the actual production line is there, of course. We are looking at the procurement. We are talking about the stores, right? Of course, we talk about stores, we are talking about storekeeper. Yes, absolutely, Pratima. So if there is adequate information and real-time information, proper information flow amongst all the departments, it would help in better control. It would avoid any losses. It will avoid overstocking of the materials, right? Imagine you go to a restaurant and you order your favorite, dish. Sometimes what happens is, uh, I'm sure you guys would have witnessed this. Let's say you are standing in a queue in a restaurant like a Haldiram, and you order a dish, and person who was right in front of you had ordered the same dish, but when it was your turn, suddenly the cashier tells you, sorry sir, that this is out of stock, and you are like little heartbroken, right? Why this would have happened is proper communication. They would have pretty much been instantly communicated to the from the kitchen to the cashier that no more of that dish. On the other side of this, of course, from a negative side of it, that the restaurant did not plan for the actual demand and they are out of stock early. So you do not want that. You do not want that, right? So you want to ensure that, okay, based on your experience, you know how much uh, of a particular material may be needed to meet the demand. Of course, ultimate objective is keep the customers happy to complete the order in time, right? Now, achieving all this, guys, as I said, to achieving all this, and when we are talking about coordination of different departments, that's my first prerequisite here. First prerequisite here is proper coordination of all departments. When we are talking about minimization of cost, economies cost, we are not talking about at the cost of the quality though, but we are looking at something which could be resulting in saving of cost from a negotiation perspective, from selecting of a vendor perspective. We are saying, okay, procurement at a favorable term. Then, right from the material requisition, so we will be talking about different nomenclature today for various forms that may be used for different purposes. So we'll be talking about that. For that, it is also important that we use the standard format. So, for example, if let's say production department have a requirement of a particular raw material, they would definitely want to request the stores that that this is something they need. These many units of raw material has to be issued. So they may be requesting that in the form of a material requisition note. And then we are talking about in terms of if there is a requirement to purchase, are we talking about you know inviting any bids, or we are looking at the goods when the goods are being received, are we talking about something like goods received notes? So various forms that could be used at different stages. And it's also very important that we use standardized forms so that later on, from an accounting perspective, from a tracking perspective, it becomes easier if the formats are in a standardized format. It should not be the different departments or the same departments at different locations are using different formats here. The example I gave you from a restaurant perspective, or for that matter, any company where we are talking about meeting the seasonal demands, to understand the nature of the business. It is also imperative that we believe in preparation of budgets here. Most of the big companies, what do they do? When we are talking about budgets, it always starts from the top line, guys. When I said top line, we're talking about sales here. So what are the big companies doing these days? For ages, in fact, they're talking about budgets in terms of, let's say, budgets starting from the sales. Okay, they anticipate these many units to be sold. Those budgets are drilled down into various months. So they actually prepare budgets for various months. And depending on the inventory levels, the requirements of the inventory levels, they kind of plan for any kind of a procurements that needs to be done. So even the budgets concerning any materials or any other suppliers is very, very important here. Uh, Regular checks and proper controls at every stage. And there are certain mechanisms. For example, we talk about various mechanisms to calculate inventory levels depending on the policy of the organization. We will discuss that as well. Proper perpetual system of the inventory. Now, perpetual system means, as we talk about versus periodical count, is we are tracking every inward receipt and outward issuance of the inventory. So we are having a proper check or real-time inventory levels at across every department, uh, or if we have different branches. I'm pretty sure one thing you guys might have experienced, and this is again, let me see if you guys have done so. Let's say you have gone for any kind of a shopping, and a particular article you like is actually not available in your preferable color or size. Has it ever happened, guys, where you have requested the manager, store manager, to check if that is available in some other branch? Has this happened? I'm pretty sure it may have. And what do you think? How that particular store manager is able to check that for you? How that particular store manager is able to check that for you? I guess the answer lies in a simple word. Any guesses? Anyone on the query panel, guys? Tamanna, Shambhavi, Krishnan, anyone? How is that possible? I think the answer lies in the real time store records or real time inventory. Pratima says coordination between them. So Pratima, when I'm talking about real time inventory levels, is you have updated inventory records at all the levels that are centrally integrated, right? So that you are able to check at location A, or you can able to liaison with the head office. Okay, this particular product is available in this much size or this color at what locations. So sometimes it happens that you request them to to tell you, and you can go at other store to get that, right? In terms of the reporting requirements, now when we talk about the integration between the management accounting and financial accounting, this is very important that we understand the usage of these controlling and the subsidiary accounts. Now, I will have a little bit of a discussion around this when we reach in terms of how the information gets flowed, what happens in the companies in the industry. That will be very much of importance and interest for you guys, and we will talk about this how or at what point there is a integration happening from what we are looking at from an inventory or a subsidiary accounts to what happens into your general accounting. Although we are not discussing accounting here, but I will touch base in terms of the control and accounting, how that link happens. So I hope everyone understands here overall objectives of the material control, and for that, to achieve that, what are my requirements. Now, to understand this approach of material control, what we'll be discussing, guys, is we will be drilling down this material control into different stages. Uh, we are looking at from a procurement perspective. We are talking about from a store or control perspective in terms of how much level of inventory should be kept. And not only that, we will be looking at from a usage perspective, consumption perspective. So these are the three areas we will be talking about. Now, in terms of the various operations or steps, if we understand as a layman, guys, what could be the sequence of operations from a material perspective? Most of you might answer, maybe it starts from the purchase, but I would like to ask from you guys, is everyone thinking from a purchase perspective, or is there anything that could come before also? I'm talking about a chronological sequence, guys, in terms of the material handling. Anyone here or on the query panel, please let me know. What could be a typical sequence? Let's say there is a production process going on and you need some materials for the manufacturing of the final product. Okay, Tamanna says plan and then purchase. Super. So Tamanna is starting from a budgeting standpoint that you budget for the sales, you accordingly plan for the production, and then you plan the purchase. Okay, that is more from a financial planning and analysis, budgeting standpoint. Very nice. From an operational standpoint, anyone would like to answer? Let's say there is a manufacturing going on. What are the series of steps that follows in a typical production process? Can I say we are talking about, let's say, when a production is happening or is basically in particular stage, and for a particular step, let's say initial step in the production, you need materials, you would approach the production department, will approach stores for issuance of the material. If they have that material, they will issue that to the production house. If they do not have the material, they will request the procurement or the purchase team for procuring. I'm sure this makes sense to everyone. Then when we are talking about from a procurement perspective, we are talking about a lot of steps in terms of inviting bids, inviting quotations from the vendors, selecting a vendor based on the various factors, receiving the material, storage of the material. So we talk about procurement, then of course when the material is received, and also keeping a track of the level of the inventory, valuation of the same. So a lot of steps are involved, guys, in terms of the entire material control. Answer coming in from Unikrishnan here, requirement from user department, go for purchase, to tenders, accounting for material issues to department. Absolutely. Perfect. So this is what I'm trying to say is that there are various small steps that depends on the previous steps, right? It's more of a sequence here. As I said, we're talking about either a store department issuing to you raw material, or they are approaching to the procurement department if that is a situation where they need a particular material. Now, when a store's department is approaching the procurement department, does that mean that they're absolutely out of stock of a particular material? I don't think so. We will be studying something called various types of inventory levels, guys. They may be having an inventory, but after the issuance, they may be realizing that okay, they have reached that level that now they should request for next procurement for further issuances. You would have planned, as Tamanna said, okay, what are the quantum of raw material you need at various stages. You know that okay, this much has been issued. Now you may be having a something in your stock in your inventory for the next issuance, but not after that. And you know that okay, this much time is generally spent in obtaining the materials from the vendors. As much as the time which takes. So we will talk about that also when we talk about the inventory levels, guys. But before that, let's do a little bit of a deep dive into a overall or a summary of overall procurement process, as I said. So these are the steps which we are talking about. So when we talk about a requirement, we are looking at a purchase requisition, and based on that, if there is material in the stores, you're talking about those material can be directly issued. But if not, then of course, based on the budget, based on the selection of vendors, you would kind of go for the best. May not be the least cost, may not be the best quality. You may have to consider the factors like previous experiences with the vendors. You may have to consider the various quotations they have sent. So cost and quality combined, you will select one. You will do the negotiations, and once the vendor is selected, you enter into a contract, and then accordingly once the goods are, so when we're talking about something like a purchase order being issued, so there are certain terms I will be talking from an industry standpoint also today, so that you understand how the process is followed in a larger setup. So when you issue a purchase order, then the goods are dispatched from the vendor. Once you receive those goods, there is a very interesting term here called three-way match. I will be talking about this one as well very soon. What does this three-way matching means here? And then of course it goes into the accounting side of things, where you are recording the vendor invoice and also making sure the payment is made on a timely basis. So this is a very very good diagram which kind of tells us how the management accounting integrates at some point with the management accounting. I hope everyone is with me on this till this point. This is the overall review of a purchase process here. Let's start our discussion now in terms of the material control. Firstly, to the material procurement, guys. We talk about control at three levels: procurement, storage, and usage. Now, when we talk about the procurement, you can see a lot of numbers which involves documents here. And we discussed earlier as part of one of the important objectives was standardized forms, right? That is something which should be there in your mind in terms of developing the format. Mind you, how the organizations in terms of the coordination operate for ages now is having something called ERP. ERP is a software, enterprise resource planning, something you might have heard about in industry like SAP, Oracle. So these are ERP softwares where they have ERP systems involved across the organization, where different departments are integrated. So information is updated at every stage. So and that really facilitates this kind of a 360-degree alignment amongst the various teams. So when we talk about material procurement, guys, as we already discussed, we are not immediately starting with the procurement. Of course, from a financial budgeting planning perspective, absolutely correct that we start with the planning of the top line, and we know okay how much purchases needs to be made, but that also takes into account the inventory levels, the desired inventory levels. So Here, to start with, at the top level, we are looking at engineering or planning department, which is actually giving you a bill of materials. We also call it as a BOM. What is bill of materials? Anyone has any idea about what is bill of materials? Let's see. What is bill of materials, guys? Waiting for responses. In terms of bill of material here. So we are looking at something coming in from the engineering department. That's a good hint. Again, you can think of any example, any product. I was talking about a simple remote control in my hands. So what bill of material is, what if I call it as this is something, a document, which specifies how much material ideally should be used in making of 1 unit of a product. Also coming in from Tamanna, bill of material contains a type of materials required by the management. Tamanna, absolutely correct. Just wanting to add one point is required by the management to produce 1 unit of product. So let's say if again I'm talking about this remote here, so I would have a bill of material with me that okay, for manufacturing one remote, how many grams of plastic may be used, how many grams of rubber may be used, how much length of a wire may be used, right? Something like that. So basically, we're saying it's kind of a list specifying some standard quantities of materials uh, for making a product here. Now that becomes very, very important. Sankaran says list of materials to be consumed for a particular product. Absolutely correct. So so what we are looking at here is we need to understand that okay, what all products, what all raw materials are needed for that product. That is again stemming down for a planning for the ultimate manufacturer. So remember, sequence doesn't change from a financial budgeting perspective. The team would have forecasted the sales. Based on that, they would have analyzed the production requirements. Based on that, you are coming on to the requirement of the different raw materials. But okay, you need raw materials, but how do you know? Okay, let's say in a particular month, I'm budgeting to produce, let's say, 2000 units of a particular product. Unless and until I do not know that 1 unit requires 20 grams, I don't know how much I need to keep purchasing, right? So that's very important in terms of the interlinking between the final product and how much is being consumed, guys. So that's something which is at a very, very first level. We are saying that, okay, you would be knowing that, okay, this is, let's say, a document which contains these are the materials that will be used in making this product, and this much is quantity for 1 unit. Accordingly, we can multiply. Now, in a normal production process, we are, if we are requiring the materials, let's say production floor, there is a production happening here, and the production floor needs the raw materials. Whom do they approach? Whom do they approach, guys? They will be approaching the stores pretty much. So production is approaching the stores here. Yes or no? That hey guys, we need this much units of raw materials for that. Is it like I should call the extension number? Please send these many units of these raw materials. We are in the middle of the production and the next batch is in the next 1 hour. Please send these many raw materials. Is this the way organization should work? Of course not. Should have a formal structure. Because remember the key word was control. The formal structure in terms of material requisition note, guys. Material requisition note, which is nothing but a kind of a voucher of authority used to get the materials from the store. You don't want embezzlement or misplacement, theft, or anything else which can result in a financial loss. So basically, a document, a voucher prepared by a production department to request the stores for issuance of the raw material. I hope everyone understands the difference between the bill of material and material requisition, though. Bill of material is basically prepared by the engineering department or planning department for overall understanding of the production team that okay, this is what you are expected to achieve. You should be keeping a watch on your team that they are not using more material than this. That is something you guys will be discussing in the variance analysis. Material requisition note, on the other hand, is prepared by the production team, and they're requesting the stores issue the material, guys. So those are two different things. But if the stores have it, if the stores have it, stores have the enough quantity, they lived happily thereafter. But my question to all of you here is, what if the stores do not have sufficient quantity A, or they have quantity, but they are then out of the stock? What do you think? What should they do next? They should prepare for purchasing them. They should prepare for purchasing, guys. Yes or no? You will never want a situation that production department is coming to you and you do not have inventory here. So it's better that from a planning perspective, those inventory levels we will understand and kind of do a quick overview of that after 15 minutes. But when we talk about the need of procurement, the store then, the store then issue a purchase requisition to the procurement department here. So we are going sequentially here, guys. We are talking about a purchase requisition, which is a request from the stores to the purchasing department for procuring those materials. Now, when it comes to that stage, guys, I would need your participation here. And this is something really happens for good for various reasons. When we are talking about the purchase requisition, does procurement team, when they receive this purchase requisition, do they have specific list of vendors and they just immediately place the order to them? Or for them also there is a series of steps that is followed? So let me ask you guys, what if someone in the purchase department always have a tendency to go for a particular vendor to order those materials? Is it okay? Is it not okay? Want to see your inputs on this? Not okay. Kiran says not okay. Okay. I think even my response would be not okay unless they have done their homework. What is the homework I'm talking about? Ideally speaking, when we talk about from a procurement perspective, mind you, we want certain things to be achieved from an organizational objective perspective. Sankaran also says not okay. So we want the best material, lowest cost possible. We do not want uh, kind of a biasness being involved in terms of selection of vendors. So there are certain questions that needs to be answered. What is to be purchased? From whom to be purchased? At what cost to be purchased? Right? From all these questions perspective, you want organizational objectives to be synchronized. Remember the three E's: economy, efficiency, and effectiveness. So we talk about economy here, but not at the quality of at the cost of the quality, guys. So there is a formal step for selection of vendor. So if I have done that and then selected a particular vendor, I'm okay. But I cannot just always realize, okay, once I've finalized this vendor, this is the vendor finalized for all. Of course, you have to repeat that process at frequent intervals. What is that process I'm talking about here, guys? So as soon as purchase department uh, receives the request here, we are going from this order here. So from left to right. So we are looking at inviting the bids, inviting the quotations. So most of companies, even the governmental departments have this requirement that they invite at least 3 to 5 different quotations from different vendors. They have a standard template for inviting the quotations. You can call it as a request for proposal, RFPs, that we need these many units of the raw material of this quality, please quote your best prices and all that. And once the quotations are received from the vendors, what do you think? Are we always picking up the least cost? Of course not. You'd want to take into account Once the quotations are received from different suppliers, you would like to take into account a lot of factors. For example, we are looking at previous experience from that particular vendor, if any. You're talking about terms like delivery period, delivery terms, reputation of that particular vendor in the market, right? So cost is not the only factor. Even the payment terms can come into the picture, guys. So all these factors are considered. And what I'm trying to say is that you may not be selecting the least cost vendor always. Is that clear to everyone? You may want to consider combination of all the factors. Let's say if I want to let's say sequentially arrange from increasing to from a increasing order perspective from lowest cost to the highest cost, and the vendor I've selected is actually the second or third from the bottom and not the lowest cost one. Let's say I have five vendors. First vendor is the lowest cost, fifth vendor is the highest, and I'm selecting vendor two or vendor three. Could be possible because I have taken into account various factors here, guys. It's not only the cost that could matter, the quality, reputation, the longevity. Tamanna says they also follow certain steps. They have to raise quotations. Yes, absolutely. So the longevity, the sustainability of that vendor could also be a very important picture because for how long that vendor has been into the business. You do not want that you start procuring from a vendor who is new into the uh, market and you don't know about the future sustainability because then you will be dependent. Then you have to change your vendor then, right? So once you have selected the vendor here, once you have selected the vendor, we are issuing, guys. So this is important. Now I'm okay. Kiran says delivery time also needs to be considered. Absolutely correct. So I would be now talking about certain terms, the process which is already mentioned in your study material, but I want to also add a little bit of a flavor from industry to it for your understanding, because I'm sure you guys will be having those practical experiences eventually. So what we have talked about is material requisition note so far, purchase requisition coming from stores to the procurement team. Procurement team is doing their inviting the bids. Once the quotations are received from various vendors, they have selected a vendor. Now procurement team will issue something called purchase order. Till now, it was only request for proposals. You did not place an order with any vendor. You were in the process of selecting a vendor, guys. But now we are talking about issuance of purchase order. You have selected a vendor. So you will not be issuing this purchase order to multiple vendors here. When we are talking about a purchase order, you will be issuing that order to the selected vendor. There would be a standard format even for a PO. With respect to your quotation received on so and so date, we are hereby placing the order for the below, units of the raw material. But the most important point here is what starts here. In fact, at every stage, I would say that all these documents are issued in multiple copies, guys. For example, I'm talking about this from a PO perspective, purchase order perspective. There will be multiple copies of purchase order, but why do I need multiple copies? For whom do I need multiple copies? Let's hear from you guys. For what purpose I would be needing a multiple copies of a purchase order? Let's see. Any thoughts? For what purposes I would be needing the multiple copies of PO? Let's see any responses on the query panel here. The Tamanna says for store, for purchase department. Okay. So can I say that, of course, it goes without saying that one copy of PO is definitely going to the vendor, right? To whom you are issuing the purchase order. One is that. But then probably one copy should be given to the store because the stores will be the one who will be receiving the material, will be receiving the material. Uh, what about the accounting team? We will talk about something called three-way matching, guys. We'll talk about the three-way matching also. What is three-way matching? I will tell you. So we are talking about issuing the purchase orders in multiple copies to multiple departments. So of course, one is going to the vendor. As soon as a vendor is receiving a purchase order, this is a very important discussion going on, which a proper flow which happens across industry, guys. So we are looking at a PO being issued by the procurement team to the selected vendor. As soon as the vendor or the supplier receives the PO, they are the seller, right? They're the seller. They have an internal process here. They have the internal process going on. What is that internal process? Let me write down here. They will generate a sales order. This is not relevant from a procurement though, but I'm just telling you the other side of the story here. What happens in industry? They will generate a sales order internally in order to ensure they have the documentation and the trail for dispatching the goods. They want to prepare for the dispatch, right? They will issue or they will generate a note called a goods dispatch note here. As soon as the goods are loaded from the factory of the supplier to the truck or to the vessel, they generate a goods dispatch note. They generate a goods dispatch note, which is a documentary evidence for the supplier that yes, goods are being dispatched. These are the goods which are issued from their store, from the supplier store now. Is everyone with me on this till this point? This makes logical sequence to all of you. People here on Zoom, Pratima, Aryan, everyone else, Shambhavi, all good guys. Any questions, please let me know. Imagine this company, this selected vendor has dispatched the goods. And let me try to make a drawing here. I don't know if it actually looks like a truck here. So there are a lot of goods being loaded in this truck. And now this truck is heading towards whom? To your stores, to the purchasing organization stores, warehouse, whatever the address that has been given. So goods are dispatched. As soon as, as soon as the goods are dispatched, what do you think? Are these a voluntary service? Or there is some document which also gets generated simultaneously as soon as the goods are dispatched? Maybe invoice? What do you think, guys? Invoice would accompany the goods, right? I'm sure those of you even do online purchasing, online shopping, the invoice is kind of generated simultaneously, right? You guys get the invoice on the email itself. So there will be invoicing also from there, which of course will lead to the ultimate payment. But before we talk about payment, guys, let's again go in a chronological sequence. A vendor was selected, purchase order was issued, vendor dispatched the goods. Once those goods arrive at your gate, once your goods arrive at your gate, you're talking about a person who is waiting at the gate who will be already having, mind you, that storekeeper would already be having one copy of the purchase order. Yes or no? That storekeeper would have been anticipating that delivery. That storekeeper who is here somewhere and having this kind of a factory gate. So we are talking about a factory gate here. Once these goods arrive here, this storekeeper would be already having a copy of purchase order also. So you will pick and tie with whatever the goods are received. And as soon as you receive those goods, as soon as you receive those goods, you prepare something called goods received note or In the organizations where they use ERP system like SAP, they enter the goods into the system, they acknowledge the receipt, and the system generate a note called goods received note, guys, GRN. We call it as a GRN. Now, at this point of time, I would like to talk about concept wherein this storekeeper, or I'm just assuming that this guy is also receiving the goods. What this guy is doing is matching the goods with the purchase order. And when we talk about this comparison, in other words, the goods receipt note to the purchase order is called something called a two-way matching concept. We generally call it as a two-way matching concept. I want a comfort level from everyone. Are you guys understanding what we are talking about here? Any doubts so far? Please confirm. I've just introduced a term for you guys called a two-way matching concept. Sankaran used some words: transport documents, e-way bill, delivery challan. Yes, different names, Sankaran. So we are talking about goods dispatch note. Along with that, of course, we're talking about, in India, like GST, require e-way bill, of course. So those are the anyways requirements in terms of what are the goods that transport carrier is carrying. Very nice. But are you guys clear on the concept that the person who's receiving those goods would be tallying those goods with the PO? And that is the step we are using for a process known as a two-way matching principle. Two-way match. Why two-way match? We are comparing two documents. So we are comparing the goods received with the purchase order. Guys, everyone clear on that? Can you please confirm here? Of course, if you do not agree or you're not satisfied with some of the goods, you appear for you to be defective, you can return those goods if they do not abide to the quality. So then there is something called material return note also. Material return note. If you have to return some of the goods for some reason. But those goods came with the love letter, right? Not love letter, but with a document. That document was probably called invoice, right? And imagine how the sequence has flown so far. Purchase order, GRN, invoice. And when this goods received note has been generated, guys, there are multiple copies. Do not forget of every document we are looking at. Even the goods receipt note copies would be given to the accounting team. I'm talking about two things here. One, we used to have a traditional setup where everything was done manually. These days, everything is done within the ERP system. So as soon as you enter the goods receipt into the system, goods receipt note get automatically get generated and every department can access it. From the accounting perspective, from the accounting perspective, what all documents they would have received. Think from a accounting department or something like a payables, accounts payable team to take care of the vendor invoices, payments. What all documents they have received till now? They have received a PO, they have received a goods received note, they have also received a vendor's invoice. So what the accounts payable team would do for processing the invoice payment, for payment purposes, they will compare the goods receipt note with the purchase order. Rather, let me write it in a different order for everyone, guys. So what the payment team, accounting team, because within the accounting also there are different teams, guys. We are talking about accounts payable, we are talking about the treasury team. Treasury team generally executes the payment, but the accounts payable team generally is responsible for, let's say, processing the invoices. So what is the payment team doing here is they are matching the invoice with the goods receipt note, and goods receipt note was anyways matched with the PO. Now look at this chain, right? As if I am kind of building a train here and adding one bogie to the other one. What is this chain called? Comparing the invoice with GRN and GRN to PO. Any guesses? What is this process called? I used a terminology on the previous slide, three-way matching concept. And I'm sure you guys will understand a macro level understanding of this, that why three-way matching is important. What we did, absolutely perfect, Pratima. What we did in two-way matching, we ensured that we received those goods which were ordered. What is the objective of comparing the GRN with PO, purchase order? We receive those goods which were ordered. So what is the objective of matching the invoice with GRN and PO? That you are only paying you're making the payment only for the goods which are received, and only those goods are received that were ordered. So you are ensuring control from different perspective. And that is why we call it as a three-way matching. I'm sure these are the terms which may be new for some of you, but I'm sure at a macro level, you would appreciate the understanding of it from an organization control and organization objective perspective. Remember the three E's, right? I hope this process of material procurement is clear to everyone. Material procurement, remember we talked about from the other side also. We discussed from the organization who was sending these goods also. Any questions so far, guys? Okay. So now let's also understand, guys, from a storage perspective. Once these goods are received, Tamanna, absolutely correct. Once these goods are received, there is a person called storekeeper. He would also have certain duties and certain ways and mechanisms to ensure the levels that to be maintained. So we are talking about material storage and records quickly. So in terms of the material storage and the records here, guys, it's very imperative that we understand that the storekeeper just doesn't necessarily only be involved in safe custody, but also ensuring that flow was smooth, right? The involvement of the storekeeper we have already seen from a purchase requisition perspective, from a goods receipt note perspective. But how do they prepare these records? There are different ways. There are different forms in which store records could be maintained. One is you can see on the screen called as a bin card, one is stock control card, one is stock ledger. And of course, most of the companies these days with the ERP in place, we are talking about the subsidiary accounts or the stock ledgers. The traditional way, I'm sure in some factories in India or even at a ground level, we may still be using bin cards and the stock control cards. What are these? Bin card is something which is, let's say, what bin card has a word called bin, right? Let's say there is a container, there are multiple containers in a warehouse, in the store, with respective bins, with respective bins. What would happen is that particular chart or a sheet on the outside of that bin would show what is the quantity of different raw materials that will be available in that particular bin. So quantity of inventory available in a particular bin. So we are talking about a bin card which shows the inventory in that bin, in that container. But we are not showing here as what is the total inventory of a particular raw material. There could be a scenario where you are prepared, maintaining these bins in terms of like, okay, there is the back the backyard at some on some stacks, there is a material, but you're moving some of the material into a bin for ready issuance to the production team. So which is basically we're talking about a bin is like a container where you're recording the simple things like materials, receipt, issue, return, whatever. Whereas a stock control card is a quantitative record for every item of the material. That means if I talk about some materials are kept at multiple places in couple of bins and on the stacks as well. The stock control card is what we will be talking about from a quantitative record for every item here. However, in bin card and the stock control card, we are only talking about the quantities here. But when it comes to the values given to them, and when we say values, guys, we're talking about cost, right? So there's something called a subsidiary ledger or a store ledger, which takes into account both quantity and cost materials. That is what becomes very imperative from an integration from a management accounting to financial accounting. We call it as a subsidiary ledger. This becomes a source document for entering into your overall cost of production later on. Of course, even for the stores ledger, there are a lot of basic documents that would have formed as an input, starting from a goods receipt note or a material requisition or invoice. How does that value gets recorded? What is the amount of cost that we record here? When we're talking about from a perspective of both quantity and cost, quantity were fine. I'm talking about the cost of materials. What all costs enter into a particular material? This is also very important for understanding. Basically, I'm talking about valuation of materials right now. Of course, with invoice, there could be a lot of additional parameters, like something like a discount. Now, within a discount, also there are different types of discounts, guys. Straight discount, quantity discount, those are adjusted on the invoice. There's something called cash discount on account of early payment that is not deducted from the purchase price. Cash discount is just on account of early payment, which is actually shown as a other income or a financing item. When we talk about any type of subsidy or grant received from government, we also reduce it from the purchase price. Something like a tax case. Generally the toll taxes and etc. get included in the cost. When we're talking about GST, now most of the times we are able to claim the input of the GST, credit of the GST. In that case, of course, you cannot include it in the cost because anyways availing the benefit. So you need to understand what all elements of the cost get added, what all elements of the cost may not be included. Something like insurance. Insurance is very important for protecting and almost necessary for part of every process these days. So these get added to the cost of purchase. Similarly, any kind of a freight inward that gets added. One important point: sometimes the goods contain, come into in something called container. Now the container can be of two types: returnable and non-returnable containers. If there is a non-returnable container, that means cost of container has to be added here because you are not returning those containers. But if they're returnable containers and the vendor will return some cost, of course, you will not include that. One important point, which we will discuss later also in terms of the usage of the material, can be at the time of storage also at various levels of the production process, is any kind of a loss. Sometimes we call it as a shortage. So when we talk about a loss or a shortage, we say that, okay, there could be normal, there could be abnormal loss. How do we take into account any kind of a shortage, guys? Now, let me quickly take you to a table, which is very well there in your study material as well. Just give me a second. So this is a thumb rule. You guys will understand this. I hope everyone can see my screen right now. So we are talking about a table here, which is given to you on page number 2.13 and 2.14. And I'm specifically talking about one item which is called as a shortage, because same logic will apply in terms of the losses, like in later on also. So if there is a shortage due to normal reasons, we are saying good units will absorb the cost of shortage due to normal reasons. So whenever there is a normal loss is absorbed by the good units. How this gets involved? How this gets absorbed, guys? What we will do is, let's say there are, so let me take an example here. Let's say there are 100 units initially, and you lose 10 units due to normal loss, normal reason, and let's say 5 units will be lost due to abnormal reasons. So that means eventually how many units of material we are left with, guys? How many units of material we are left with? Any answers? Out of 100, we lose 10 because of the normal loss, 5 because of abnormal. Concurrent had an input coming in for the inclusion of cost, material, transport, handling, GST, if not payable. Yes, absolutely concurrent. That's what we discussed. Thanks a lot. Okay, coming to my example, Tamanna says 85 units are left, right? So what we'll do is, guys, we will calculate the cost. We will divide by not 100, not 85, we'll divide this by 90. So basically 90 units will absorb the entire cost, and whatever the per unit cost we arrive at, we will charge for the 5 units to P&L, and for 85 units, we will charge to cost of production. So we are talking about any shortage that arises for abnormal reasons, like material mishandling and all. They are not absorbed by the good units. They are debited to the P&L account. So Pratima, absolutely correct. But what we are trying to say is that we are not absorbing the good units are not absorbing the loss due to abnormal reasons. That portion will be taken to the P&L account. I hope that becomes very clear. So this table is very important, guys, for you guys. Basically, to understand what are the costs that are included, what are not included. But this understanding of normal and abnormal loss, we will probably touch base again in some time, right? I think now it's a time that we can quickly jump into the inventory level controls, guys. When we talk about the inventory control, we need to understand what we talk about here is at what level do we need to maintain inventory. See, there are two things. Now, this is something you guys will also study in financial management in terms of the working capital. There are two things normally: profitability and liquidity. So you do not want to end up into the extremes. A, that you have huge investment in the stock and you start losing money due to the investment, due to the warehousing. Even the stock may get pilferated or obsolete. Neither you want to be in a situation that you have too much or rather too less of an inventory, that every time you are getting out of stock and your production is hampered. So you have to strike off a balance here. So when I say strike off a balance, we are calling it as a trade-off between a stock out and overstocking situation. And there are different ways we can arrive at these inventory controls, guys. By setting a quantitative level or on the basis of classification like ABC analysis, we'll talk about that briefly, or vital, essential, desirable, something like that, or maybe monitoring some ratios, or traditional ways of physical control. But uh, from an examination perspective, guys, repeatedly there have been questions around uh, in terms of the quantitative level. So this becomes very, very important for us. From a organizational practice perspective, a lot of units, a lot of companies also follow this ABC analysis. Even that becomes very important. Let's quickly talk about what are the different quantitative levels we are looking at here. So you can see different levels here: reorder stock, economic order quantity, maximum stock level, minimum stock level, uh, buffer stock, danger stock. And every level has some relevance attached to it. Now, something like a question can come up like, should I keep a maximum stock level in my storehouse, or should I keep a minimum stock level? Or should I keep, let's say, average stock level? Now, that depends on various factors, like, as I said, working capital policy. Are you aggressive? Or you want to, if you're aggressive, you are pretty much sure of your supply chain management, you can keep a minimum stock level as well. But if you're conservative, you always want to keep a buffer, then you are talking about either an average or a maximum stock level. Now, of course, there is a cost attached to it, right? If you're keeping too much inventory, you have a storage cost, you have an investment block in the inventory. Although your ordering cost may come down because you're ordering less number of times, right? So there are a lot of things we need to understand here, and a lot of questions come on this area, guys. So we will talk about certain formulas here on the quantitative levels of controls. But let's understand these levels also. So when we discuss all these levels, we're talking about reorder stock, when to order, economic order quantity or reorder quantity is how much to order. Now, this is where we are talking about the cost to be kept minimum here, specifically ordering cost and carrying cost. So let's understand from a graphical perspective, what are we looking at here? So we are looking at different levels of the stock on this particular slide, which either we are looking at a maximum stock level or at a minimum stock level. And no marks for guessing that, okay, minimum, maximum, or majority of the entities may be operating somewhere in between, something like a reorder level, which takes into account of a lead stock, safety stock, right? And also some level over and above. Now, as I said, from examination perspective, guys, all these levels are important in terms of how do we compute. They can give you some information with respect to, and we'll discuss some examples later on. Also, that they can give you an information about the requirement of inventory, maximum stock levels they are keeping, or the maximum consumption, or a maximum delivery time, and they're asking you to calculate, either the economic order quantity or minimum stock level. So there are different ways to go about it. So these formulas are very, very important for you guys. So let's talk about these one by one. First, let's talk about a reorder level, guys. Reorder level. You guys can see a couple of formulas here to calculate a reorder level. Depends on various factors. Okay, which formula do I use? Would these formulas give the same answer? May or may not be. Depends on the information available. Of course, with one entity, they may be using one formula, whatever the information they have handy with them. So what is the reorder level, guys? As you saw in the last slide, in the graphical perspective, this is somewhere in between the maximum stock level and minimum stock level. That's my reorder level. Maximum stock level and minimum stock level. That means there could be different ways to calculate it. Before I go to the formula, I'm saying that, okay, it could be based on the upper side or it could be based on the lower side. So I can either calculate from a maximum consumption perspective. Of course, it will be below the maximum level, but I can either calculate from the top level or I can calculate from the bottom level. That's what the couple of formulas we have. So one formula we are having here is for reorder level here is maximum consumption into maximum reorder period. The idea for this level is that you want to ensure that a material order is received before any stock out happens. There is always a sufficient quantity in hand to cover normal, abnormal consumption requirements. What is maximum consumption here? Maximum consumption at a peak production capacity. Maximum reorder period is the maximum time you would have analyzed to get the order from your vendors. However, alternatively, it can also be calculated based on a minimum stock level also. Now, if you look at the second formula here, we are saying, which makes more logic to you, I'm sure. We're saying, okay, minimum stock level plus average rate of consumption into average reorder period. I'm sure many of you would be liking the second formula in terms of the graphical presentation. Okay, we are adding something to the minimum stock here. We're adding something to the minimum stock level to reach at reorder level here. And that's what the beauty of it is, that the formula for the minimum stock level is interrelated. So either you calculate the ROL using the minimum stock level, or you calculate the minimum stock level calculating the using the ROL. Is everyone clear on the second and third formula, guys? You guys can see a clear-cut correlation. Is A is equal to B plus C, then B is equal to A minus C. Can I get a confirmation, guys? The second and third formulas are clear to everyone. And mind you, when we talk about these formulas, guys, it's also important to understand and appreciate that these, when they come in the exam, you need to be pretty much careful about information given to you. They may be giving you, let's say there are three or four parameters. They can give you two parameters and ask you third, or they can give you three parameters and ask you fourth, right? So it's very, very important that we understand this part. The next formula is very much not alien to you guys. I'm sure most of you would have seen this formula earlier, reorder quantity or economic order quantity, 2AO upon C square root, where A is annual requirement, O is cost per order, and C is carrying cost per unit per annum. Now, in this formula, the only thing you need to be very, very careful that we are having consistency in the period in the numerator and denominator. Here we are saying annual, here also we are saying per annum. So it's annual on the numerator, annual on the denominator, right? So that is something we will be discussing in one or two examples also. How do we calculate it? See, the idea of EOQ is economic order quantity. What is the rationale here? That this gives you not, this is not giving you the inventory level, by the way. This is the formula which is giving you ideal quantity that should be ordered. Ideal quantity that should be ordered, which could keep your carrying cost and ordering cost at minimum, guys. That's why we also call it economic order quantity. It brings us economies in ordering cost and carrying cost. Ordering cost relates to the work which is involved in the ordering, like inviting quotation, documentations, time involved. Whereas the carrying cost is basically, as I said, warehousing, insurance, storage cost, basically, or even the obsolescence cost comes into the picture. Now, apart from this, we saw different other levels also, like minimum level, maximum level, and the uh, average level. So we have already seen minimum level, interrelationship between the reorder level, but let's also see the formulas for the maximum level here. Mind you, one of the formulas for ROL was maximum consumption into maximum reorder level or reorder period. Some students think that, okay, my maximum level should be that, not reorder level. No, this is not the case. So we are calculating the maximum stock level with a different formula altogether. Maximum stock level is not maximum consumption into the maximum reorder period. That's the way to calculate reorder level though. Don't confuse yourself with the word maximum here, please. So maximum stock level is a ROL plus EOQ minus the minimum consumption into minimum rate. So what we are trying to achieve here, this is the highest level of quantity that you can held in stock at for any material at any point of time. Because if you are going beyond this, you are unnecessarily blocking your funds. You do not need that. You're unnecessarily incurring cost of storage. You are unnecessarily leading to a situation that you may have obsolete materials at some point. So maximum is more of a upside side. You cannot go. I think if you relook at the diagram which I showed you, this reminds us of. I'm sure many of you would have this water tank alarms at your home. How many of you have this? Water tank alarms where as soon as the water touches the maximum level, the motor switches off, right? The motor switches off. And probably as soon as the water touches the lower part, the minimum part, the motor switches on. So it's a very, very some people are acknowledging on the query panel as well. So I'm happy that you guys are able to correlate with the practical examples I'm giving here. So coming back to the maximum stock levels, we cannot go beyond that. Then we have an average stock level, the easiest formula, I'm sure. So maximum stock level plus minimum stock level divided by 2. And when we talk about understanding of the average, of course, this is something which is in between, and this also depends on whether should I keep minimum level, maximum, or average. As I said, depends on the working capital policy. You want to be somewhere between aggressive and moderate, you can keep an average stock level also. There is something called danger level. Danger level is nothing but level at which the normal issue of the raw material can stop, and emergency issues are only made. So what does it mean, guys? From a understanding perspective, when we say that okay, this is the danger level, that means are we looking at too low a level that only critical issues will be there, and you do not really want to be at that level normally. But if at all you reach that danger level, then you're talking about only emergency issues, so that only the emergency or the priority orders are taken into account at that point. So as an organization perspective, you would not want to be at a danger level, right? Okay, continuing our discussion on the inventory control perspective, guys, this is what we had from a quantitative levels. Now, can we do something to our process to facilitate this inventory control? Yes. One of the biggest examples which industry follows is something called just-in-time inventory, guys. Just-in-time inventory. Now, this is a very important where we are talking about a strategy which aligns the requirements from a raw material perspective to the production schedules to the delivery pattern by the suppliers. As the name suggests, just in time. I don't know how many of you have watched a movie called Hindi Medium. If I am, if I try to recollect that movie, Hindi Medium, in that movie there was a scene where this actor, what was his name, Irfan Khan, right? He was working or pretending to be working in a biscuit manufacturing factory, and he was involved in some kind of a conversion, and something happened from like whatever his role was from a packing or moving those packets, and he missed out due to some conversation, and the entire assembly line stopped. One disturbance one disturbance can hamper entire assembly line, entire production channel. That's the relevance of just in time here, guys. You're saying producing the goods only when it is required, and as soon as the production is going on, you're receiving the input. So for this, your supply chain mechanism has to be very, very robust. So what this is built on, if you see the bottom sequence here, there is a demand for the final product. As soon as there is a demand, the production starts to process. As soon as the production is happening, the material requirement is sent, and the material requirement is connecting to the order, and the supplier is sending the product. So if I look from the right to left now, instead of left to right, as soon as there is a requirement for the raw material, the vendor should have been already sending that material to you, so you will be receiving that material. As soon as there is a request for production, that material is issued, and as soon as the customer is placing the order, you are selling that final product. So I think just-in-time inventory, it's very interesting concept if you look from both from left to right and right to left. So in the idea here is just in time, right? Because you don't want, or rather you don't want excessive inventory. Just in time, the fundamental here is that you should have zero inventory in the store. You don't want excessive inventory. As and when you need, it should be there. So produce the goods when required, and receive the raw material as and when it is required for issuance. So that's why the supply chain mechanism is very, 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 very important, guys. Now there is an illustration in your study material, guys. I want you guys to definitely go through that maybe later on, which is illustration 7, which is let me kind of show you my screen. It's a very good illustration for understanding. So this is the illustration, guys, in your study material, which talks about four-wheeler tires and tubes, which stocks sufficient quantity of every vehicle. And in a particular year, the report of sales manager revealed some data, stock out data for 100 tires, 80 tires, 50, 20, 10, and the number of times the stock out has happened as well. So what they have done here is they're asking you the optimum safest stock level. This is a very, very good illustration, which is kind of using the table. Some students find it a little tricky to understand, and that's why I'm just touching base this for 2 minutes here. So if we have to understand what is the optimum safest stock level, the answer should be which gives me the minimum cost. That is for sure. And they're giving you a data for a stock out. So 100 tire stock out is happening twice. So you may not be as much concerned. But if I say that, okay, a stock out is something like 20 tires or 10 tires, which is happening 20 times, 30 times, could be a major concern. But what we are doing here is for determining the optimum safest stock level, we are making a couple of columns here. First column is safety stock level. That means this much inventory in hands. And the second column is stock out. Now, this is what you need to understand. If I'm having 100 tires here, so I am not having any stock out here, zero stock out. And what is the probability of the zero stock out, guys? We have given the number of times the stock out. You can probably do a quick calculation. What is the total of this section? What is the total of this section, guys? I think it should be 100. So we can arrive that is a probability. So for a zero stock out, there is a 33% probability here. Hence, there is no stock out cost. Only carrying cost is involved. There is a carrying cost given to us in the question itself, 50 rupees per unit. When we are looking at inventory level of 80 tires here, we are looking at a possibility of stock out of 20 tires here. Because if you're having a 80 in hand, we're talking about a 20 tires here, which has a probability of 20% here. But are we looking at a 20% here? That is what you need to understand. I need an input from everyone. What do you think, guys? If I'm having a safety stock of 80, that means we are talking about a stock out units of 20 here. Who will tell me how we are arriving at 0.02? And I'm just typically discussing this because many students get confused into this one. Now, what you need to understand here is, guys, in terms of how we are taking this probability for a 80 safety stock level is, do you guys agree with me that there will be stock out only if there is a demand of more than 80 tires? Yes or no? If I'm having a safety stock level of 80 tires, I will be having a shortage or a stock out only when there is a demand for more than 80. And in our table, we are not looking at 20 then, but we are looking at 100 stock out here. So if there is a demand of 100, then only there will be stock out, guys. Because I'm already keeping a 80 inventory level. So I'm just kind of linking these two for everyone's reference here. Stock out of 100 with a safety stock level of 80. So if I'm having a safety stock level of 80 tires, if there is a stock out only when there is a request or a demand for more than 80, which is given to us as 100 in the top table, that means there is only a 2% probability then. It's a very interesting table, but sometimes students get confused. That's why I'm spending some time on this one. Similarly, if I'm talking about a safety stock of 50 here, we are talking about few possibilities. We're talking about few possibilities. That means if I say 100 minus 50, if there is a requirement of 100 tires, we are looking at a stock out of 50, or we are looking at a requirement of 80, then there is a shortage of 30 here. So how does this 30 arrive? If I have a demand of 80, if I have a demand of 80 and I'm having a stock of 50, there is a shortage of 30, but there is a probability of only 5%. So this is very, very important, guys. And at every shortage, we are kind of multiplying that with a stock out cost. And we are arriving at both the probabilities as a total level. So total expected stock out cost with the probabilities 375. And we are carrying out a total cost here by keeping a inventory level of 50. So what we are doing here is, I'm not discussing the entire levels or the entire illustration with you, but I'm explaining you the approach to this illustration. We are talking about to select the minimum cost. We can see the minimum cost is happening at a safety stock level of 20 units. Where the minimum cost comes out to be 2140. Because at other levels, even it is higher. So if you go through a little down, there is a table which explains every level, guys. That's where it becomes very, very interesting for you guys to understand how did we build up. For example, when I said what was happening if I'm having a, let's say, inventory of or a safety stock of 50 units of tires. So if I say stock out, it will be only when there is a demand of more than 50. And in our table, we are talking about 180, I guess. If there is a demand of 100, I will be having a shortage of 50. If there is a demand of 80, I will be having a demand or a shortage of 30, guys. Can I get a confirmation from everyone if this is good for all of you? For those of you who have not gone through this illustration, this discussion will help you to understand. Can I get a confirmation, guys, in the query panel as well? People who are live over there. Tamanna, absolutely correct. What about others? Any questions, please let me know. Thanks for confirming, Preeti. Thanks, Tamanna. Perfect. Now, let's also quickly look at the other various ways of stock control. I was talking about a relative classification, guys. One is a ABC analysis. One is a fast, slow, and non-moving, vital, essential, and desirable, high, medium, low. So ABC is based on the value and the frequency. Now, this is a very, very interesting, actually. ABC analysis is a very, very interesting analysis, guys. You divide your inventory into three categories: category A, B, or C. Now, A is in terms of the value. A in terms of value or a high value inventory items, guys. Heavy investment is required. Almost 70% of the inventory value is invested in category A, but from a consumption perspective, they are only like, or a quantity perspective, they're only 10%. So it's very important to have a critical control on these, because these there is a heavy cost involved. So A category, and that's why it is category A. And it's easier to implement controls because they are 10% of the quantity. Now B is somewhere middle. We are saying that, okay, relatively less important than A, but more important than C. From a quantity perspective, it is 20%. Even from a cost perspective, it is 20%. And the C category, which may just be having a regular review. I'm not saying to ignore any category, but definitely we are having more stringent control on the category A inventory. From a C category, they are 70% of the total items, nut bolts and spares and all that. They may be having a 10% of the inventory value, but they are huge in number. So what we are looking at here is, depending on the ABC analysis, we are looking at the controls that should be implemented here. So I hope this is clear to everyone. So we're looking at a requisite in terms of our analysis. When I'm saying that, okay, C category, these are not requiring a constant control, but definitely they requires a regular checker. But when I talk about A category, where you should be definitely having an effective control mechanism, right? So that is more from a perspective of a relative classification. There are few more though, which is divided into two halves here. One is a fast, slow, and non-moving, and one is called as a vital, essential, and desirable. Now, this all depends on the policy of the companies, guys. Like as I said, in the industry, if you ask about my experience, a lot of companies use ABC analysis. A lot of companies don't mix ABC analysis with ABC costing, though. That we'll be discussing later on. From a material classification perspective, FSN is also very, very important. Because when we're saying fast, slow, non-moving, so fast is kind of which are regularly required, and of course we are talking about these are regularly in demand. So that particular classification is something where you need to be having a frequent reviews. You also want to ensure that there are no stockouts for the fast moving items. Slow moving, of course, is something which may not be required to be stored immediately or very, very near to the store door, or can be kept at a safer place, which can be infrequently required. And you may not have a regular check, but definitely a periodical review on this. And if at all you feel that, okay, some items maybe needed more frequently, you can move that classification to the fast or vice versa. That if you have some items which are absolutely now required very, very infrequently, you can classify them to a non-moving also. But very important here is inventory classification, which is a non-moving here. There, that category could be important, wherein you have a risk of obsolescence coming into the picture. This category of the items, when we're talking about from a non-moving perspective, we need to understand that this is something which should be reported to the management. And of course, if at all you feel that there could be an obsolescence, it could be a provision for loss requirement. Now, we are saying that okay, should there be inventory in the in the let's say in the slow moving or non-moving? As I said, depending on the production requirements, depending on the top line requirements, depending on the taste and preferences, the composite of the final products, lot factors could decide that could result in a shuffling of these categories, guys. So, for example, if you're talking about we are not having a periodical review, then definitely we are missing out a lot of things. We may be resulting in a stock out of a fast moving item versus ignoring the non-moving or keeping too much of a non-moving items. So we want to avoid these situations, and that's why control becomes very, very important. Even a parameter like or a classification like a vital, essential, or desirable becomes very important because this revolves around the criticality of the production here, guys. As the name suggests, answer is in the name itself. We are looking at vital items, which are very vital, as if any unavailability could interrupt the flow of the production. Then we have essential, wherein they may not be as vital, they're still essential. That means if you play around with any kind of the quality or there are more than reasonable delays, that could hamper the production or the quality of it. And desirable are the third category or the bottom category, where we are saying that, okay, it may not result into a major loss, but that doesn't mean that any of these categories are not important. When you say desirable, their unavailability may not cause immediate efficiency loss. But of course, when you're talking about prioritizing things, then this classification becomes important. You have to have a constant check on the vital ones than the desirable ones. Right? That's very important. Any questions till now, guys? From anyone or all good? Any questions? Let me know, guys. Preeti says all clear. Thanks a lot. Thanks, Tamanna. Nice. So now also talk about, guys, a quick understanding or of can the inventory control happen using the ratios also? Why not? We're talking about a productivity ratio, which is also called as an input output ratio. We're saying that okay, input output ratio, as the name suggests, a ratio of the quantity of input to the production or the actual output. So we're saying input upon output. So what if this ratio deteriorates over the time period? You do not want that, right? Because there is a loss, there is excessive usage than the required. I think this is very important where the point where we started from, a bill of material can become very handy here, because you knew that okay, how much you are expecting certain material to be used for a final product, but the productivity ratio, input output ratio indicates something else. So that means you are inefficiently handling the raw materials here. That becomes very important here. Okay. So in terms of the activity ratio, we are looking at uh, inventory turnover ratio here in terms of the requirements of average raw material consumed upon the average stock. So that is also very important because we want inventory to be churning around, right? So high inventory turnover ratio means that we are talking about a faster inventory. Low inventory turnover means it could be a slow moving item, but it indicates the way the inventory is uh, moving. Okay, guys, whatever we have discussed so far, let us try to implement that with few questions, right? So, as I said, we'll be discussing the concepts here, and then we will be discussing implementing that into some questions, specifically the inventory levels. So, and what participation from everyone here. Whatever we have discussed so far, let's try to articulate that, implement that in a question. So let's see, you guys can see a question on my screen. So we are looking at a question number 1 here, which says A Limited has furnished the following information for the months from January 1 to 30th April. We are looking at the number of days, production per working day, raw material purchases, percentage by weights to total of 4 months here, because we are not talking about from January to April, purchase price of raw material per kg, and we are looking at quantity of raw material per unit of product, opening stock of raw material on 1st January and closing stock on 30th April is given to us. Mind you, the cost becomes very important. All purchases of material are made at start of each month. So we are required to calculate consumption of the raw materials month by month and in total. Calculate the month-wise quantity and value of raw materials purchased, and also how the store's price is done using FIFO. So we will discuss that also while we solve this, that how the valuations can be done. So there are three methods. I will talk about that while calculating this in terms of FIFO, LIFO, or average methods. Now, considering the requirement here, what exactly we are looking at is that we are given certain data, and in this case, how do we approach, guys? How do we approach? Any inputs, guys? As is, what should be a starting point from anyone? How do we approach this kind of a question? Let's see who answers this. The requirement in the first question itself is calculate the consumption of raw materials. We are talking about the number of working days. We are talking about the production. So let's try to, based on that, do a calculation here, which would be based on consumption of a raw material for every month and of course in total. Mind you, based on the given information, we can first calculate the production though, and then of course in terms of the requirement of the raw material consumption, this information becomes important. So once we know the number of units to be produced, we can use this quantity of raw material per unit of product as 4 kg to make it as a consumption requirement. So let's do this. In terms of January, February, March, and April, we are looking at number of days in production per working day. So what is the total production we can arrive at, guys, by multiplying these two? 25 into 50, 24 into 55. So if I quickly mention here as a production, we are looking at a requirement of 25 into 50, that is 1250 here. We are looking at 24 into 55. That should be giving us, I believe, 1320. Let me know, guys, if you guys are okay with these calculations. So what we're doing is number of working days multiplied by the production, right? So we are looking at 25 into 52. Looks we are getting a 1300 units here. Now, based on this production, it's pretty easier. We can quickly calculate the raw material to be consumed. What we need to do is we are just kind of multiplying each part by 4 kgs. So based on this, what is the raw material required, guys? Because per unit it is 4 kgs here. 4 kgs per unit. So we are looking at 5,000. We are talking about 5280, 6240, and 5200 here. I hope everyone is okay here. So the requirement was, first requirement was calculate the consumption of the raw material month by month and in total. So what is the total consumption, guys? If you want to quickly add this, total consumption, if you want to add this quickly, 5,000 plus 5280 plus 6240 plus 5200. Anyone? Are we getting 21,720? Right? So that takes care of the first requirement based on the planning data which is given to us. Preeti says 6250. Okay, so Preeti, are you giving me answers for the purchases or what? I think we are talking about raw material consumption here. 5,000, 5280, 6240, 5200. Total consumption as 21,720 here. The everyone okay with this point, guys? So what we have done is based on the production, we have calculated the raw material to be consumed every month and we have added the 4 months. So that takes care of the first question's requirement. Is everyone clear? Any doubts? Please let me know. Now, for second part, what we are talking about here is they're telling us calculate the month-wise quantity and the value of raw material purchase, guys. Important to understand how do we go about this. We are given opening stock of raw material is 6,020. We are given closing stock also. And we are talking about the consumption as well. What is also given us is the raw material purchases percentage. How do we use this data, guys? How do we arrive at month-wise quantity and value of raw material purchased? We have to understand, analyze the information given to us is in the percentage form. Can we actually calculate? Because we have already known the consumption in kgs in part number 1. Can we calculate the total purchases and apply these percentages? I think we can. Because what we understand is in terms of the consumption, if you want to relate this, that this should be equal to my beginning stock plus purchases minus ending stock. Do you guys agree with this formula, guys? From a consumption standpoint, we are saying that it should be equal to my beginning stock plus purchases minus ending stock. Accordingly, can we calculate purchases, guys, here? Whatever we have done so far, we are saying that, okay, 21,720 is my consumption, which we did. Beginning stock is given to us as 6020. Purchases we need to calculate. And ending stock is given to us as 5100. So accordingly, purchases can be calculated here. Accordingly, the purchases can be calculated. which ideally seems to be a 20,800 if I'm not wrong. You guys can double check because my closing stock is less than the opening stock by 920 here. Thanks for confirming, Preeti. This is just giving us the starting point for the second question, though, guys. Because we are asked here month-wise quantity and value in the raw material purchase. So that means if we know this overall, and if we talk about, let's say these are my months, January, February, March, April, we can probably now do this, percentage utilization here. We have given 21, 26, 30, and 33. We can apply that to 20,800 because we know this is my overall purchases. So 20,800 for that matter. For example, we are saying 20,800 into 21% gives us a quantity of purchased of 4368. Similarly, 20,800 multiplied by 26%. We are looking at 5408 here and so on. And they are giving you the purchase price as well, which is 10, where this is of course per kg here, 13 and 11. So quantity into purchase price will give you the value of the raw material purchases. So in terms of the value, in the month of January, we are looking at 43,680. Whereas in the month of February, we are looking at 64,896. Guys, everyone with me on this? Please let me know. Any doubts so far? Any doubts so far? Is everyone okay with the part one and the part two of the question? Okay. Thanks, Preeti. Anyone on the query panel? Okay, guys. Before we talk about the third part, guys, there is something which you should be aware of in terms of. So I will come back to the third part in a moment. In terms of the valuation methods, how do we value the inventory at hand? These can be based on the cost price methods, average price methods, market rate, depending on the company policy. Most common cost price methods, we have either the specific price method where you have high cost inventory. You can have FIFO or LIFO, first in, first out LIFO. Now, if you talk about FIFO or LIFO, a lot of things change in terms of the regular practice. Let's say there is a price increase going on, inflation is there. So there is inflation. You're talking about increase in prices. We are saying that okay, in terms of FIFO, what will happen is my current cost would be representing the earlier prices, but my ending inventory is at the current price. If I talk about LIFO, my cost will always match because I'm saying last in, first out. So there are plus and minuses. Similarly, there could be a average price method where there's something called weighted average. So where we kind of take care of all the prices, all the purchases at different prices into account, and we divide by all the total quantities to get a weighted average here. So in our question in hand, we are looking at FIFO here. The question we were discussing here, the requirement was to prepare the store's ledger using FIFO. That means we will be, for subsequent issuances, we are looking at first in, first out here. Guys, everyone with me on this? We know consumption, we know consumption, we know beginning inventory, and we are looking at the purchases as well. So if we try to understand how can we, probably go about this one in terms of preparing a FIFO, let me showcase a simple example for, let's say, first month here. I'm sure you guys can take care of the remaining exercise though, but just to give you an idea about how we take care of the initial months. So let me show you here. Just give me a second, guys. Okay. So we are looking at in January, we are looking at the beginning balance of 6020, right? So let's look at our stores ledger. How do we go about this one? If you see in the beginning, in the January, we have opening balance here, 6020. You can see a stores ledger which talks about the issues, receipts, issues, and balance. So my beginning balance is 6020, and we have a rate given to us in the question itself. We're talking about 63210 is given. So 63210 divided by 6020 gives us a 10.5. And in the month of January, we are talking about a purchase here, which we have calculated at 4368, the rate of 10. So at this stage, our inventory is this much, combining these two. And when we are issuing, when we are consuming, mind you, we calculated the consumption, right? As a part one. In the January, there was a consumption of 5,000 units. In January, there was a consumption of 5,000 units. So what we are looking here is that it is first in, first out. So entire 5,000 is going from the opening stock first. So what happens as a result, I'm left with 1020 from that. And there is an additional purchase of 4368 still remains intact here. So this is my inventory at that point of time, or rather this one, 4368 and 1020. And what happens here is we are talking about the February purchase now. So at this point, at the point of purchases in February, we are looking at three levels of inventory here. One is from the beginning, from the opening, we are left with 10.5. We are talking about the purchases of the January here, 4368, in terms of the January perspective. And then we are talking about the fresh purchases. So let me put it that from a month. I'm marking here. So this is my Jan, this is my Feb. In the month of February, we are looking at a consumption of 4260. So there's a question coming in from me for everyone. Following the FIFO, what do you think? 4,260 units are being issued here. 4,260. What do you think, guys? Which particular lot should be first touched upon? Which particular lot should be first touched upon? Please tell me. In terms of the consumption part. Okay, I'm receiving an answer. Previous lot. Previous lot or the first lot? This is previous lot. I think whatever the first lot, first in, first out, right? So when I'm saying, okay, 4368 being issued here, we need to understand, or rather 4260, whatever it is. So we're looking at the first purchase going in. So what I'm trying to understand here is, if the 4260 is issuing, so first this will, like, let me actually change the color here. It will first impact the 1020, 1020. So what is the remaining lot here? We are looking at 3240. This should be targeted to from this one, 4368. So if I say 4368 and 3240 are issued out of it, we are looking at uh, a 128. How much is? What do you think from a consumption standpoint? How much is the consumption for the February? In the February, we're talking about a consumption of 5280. So 5280, we are looking at two parts. Entire 1020 is gone. Entire 1020 is gone. No, so Preeti, actually 1128 is the remaining amount. But remember, let me just kind of quickly earmark this with a green color here. Give me a second. If you go to the part one, we had a consumption of 5280 in total. 5280. And in terms of the 5280, we are building up this consumption in two lots. Entire 1020 is gone. And then we are talking about the remaining 4260 from 4368. So we are not getting 1128, but rather we are getting 4368 minus 4260. So we are actually left with only 108. Vidya, I hope it is clear. So we are left with 108 and 5408. So in this way, your March and April can be built upon. This way, your March and April can be built upon. Is this clear now to everyone? Because mind you, you have to make into sure that the first part, which was a consumption part, becomes an input here, because we are preparing this based on the FIFO ledger. Any questions on the query panel, guys? Just want to double check. Yes, Tamanna, absolutely correct. So 1020 has to be issued from the first lot. Absolutely correct. Okay, guys. So I think this is something a good. So this is basically from your previous exam questions, guys. I would like to also do a question on the inventory levels. But before we do that practice quickly, I want to probably invite any queries here. I'd like to invite any queries. Whatever we have discussed, any queries from anyone, guys? Open house. Ajiji, you're there. If the students can ask questions now. Any questions from anyone? Okay, so no, Abdan was saying I was on mute. So I was not actually, I was on mute, but I was just checking with the team. Guys, any questions, please let me know. Any questions, please let me know if you have any questions. Uh, Tamanna saying all clear. Preeti saying all clear. What about others? People who are here? Was thinking of having few minutes of an open house chat here. Any questions? How to approach? Any questions for the topic? Okay. So in case of no questions, we can probably go to another practice question though. And before we do that, okay, so there are people. So everyone is. Someone was asking question, right? Okay, I thought. Anyone wants to speak or want to ask? I thought someone was unmuted. Okay, guys, before I go to the practical question, if you have any doubts, let me know in between also. Uh, let us quickly look at a couple of brain teasers here. There are a couple of questions on your screen. A couple of questions on your screen, guys. And we are looking at answers from you guys. And while you are giving your options, please mention question number one or question number two. You're already getting first answer here. Hmm. Okay, so the answers I'm getting here is for question number one. Let's see on the query panel. What are the answers? Anyone on the query panel, guys? Tamanna, anyone else? Pune Krishnan, Sambhavi. Okay, I've got answers from Tamanna though. So everyone here telling me answers for question number one as B. So form used for making a formal request to purchasing department to purchase material is, we discussed this, from the purchasing department, or other request to the purchasing department. So this is a request to the purchasing department would be coming from which department, guys? Probably stores. Stores would be making a request for the procurement department, and that would be your purchase requisition note, guys. Purchase requisition note. So I think maximum answers I've got for question number one is B, which is correct. Tamana, I hope you got it. So we're talking about request to purchasing department. So material requisition note would be the request coming from production to the stores. But we are saying a request made to the purchasing department that becomes purchase requisition note here. Nisha, I hope it is clear to you also. So answer one would be option number B here. Question number two here is, in which of the following methods of pricing cost of goods sold lag behind the current economic values? Cost of goods sold. I just explained that, by the way, and I'm getting different responses for second question. Some people are telling me A, some people are telling me B, some people are also telling me C. I think you guys are missing out one point here. In which of the following methods of pricing cost of goods sold lag behind the current economic value, lag behind? That means the cost of goods sold are probably the earlier prices. And we just did an example on that one. If we are saying that cost of goods sold lag behind, that means they are not reflecting the current prices, guys. They're not reflecting the current prices. And that's something we did in the FIFO, I guess. Example we did. So the answer for the second question happens to be B as well. I hope it is clear now. People who were thinking of A or C, I think you missed out on that term called lag behind. That's important here. Okay. Uh, let us do one thing. Let us do another question now. Thanks, Abdul. Let me pick up a question which, okay, let's see question on a screen. We are looking at another question. Everyone can see this. ABC Limited manufactures a product AM25 using a material CEE. Following information is available regarding this material: purchase price, cost of placing an order, Carrying cost per annum, 6%. Consumption is given. Lead time, average, maximum, minimum. All the three perspectives are given to us. And the maximum consumption per day is 200 kgs more than the average consumption. So this could be an important information for us, calculating the different levels here. It's again one of our past exam papers, guys. Now here we are looking at a requirement of EOQ, reorder level, and maximum stock level. So I would invite you guys to tell me, how do we approach the EOQ requirements here? Of course, everyone understand from a formulation perspective, if we have to calculate the EOQ, we are talking about annual consumption ordering cost into 2 upon the carrying cost per annum, the square root. So let's see if anyone wants to give me the answer for the EOQ part. I can quickly do a help here though. We are looking at 2 into annual consumption, I guess, is given to us 194,400. Is ordering cost given to us? I guess yes. Ordering cost given to us is 150. And carrying cost is per annum is 6% of purchase price. So my purchase price is 300. And if I calculate 6% of 300 here, we are looking at as 18. So carrying cost is your 300 into 6%, guys. So what is my EOQ? Who will tell me what is the EOQ here you guys are getting? Is it 1800? Preeti says 1800. Perfect. So 1800 is what we got. And then next is your point where those formulas will be used. We are saying a reorder level here. And remember, for reorder level, we discussed a couple of formulas. I hope you remember that. For a reorder level, you can probably quickly go back where we discuss those formulas so that you guys are kind of abreast of that. A maximum consumption and maximum reorder period. And then based on the minimum stock level plus average rate of consumption here. Now, considering the information given into this question, guys, considering the information given for us, what do you think, the formula using the maximum consumption is better or the minimum consumption? What do you think? I think you guys need to learn to take a call then based on the inputs, based on the information given in the question. It may happen, by the way, if in some questions both the informations are given, then probably my advice would be to calculate using both. Answer may be different, but in practice, industry may be following whichever information they have, or based on their working capital policy, whether they want to be optimistic, they want to be aggressive or conservative. So are we having a reorder level information here, or we are actually, or rather, a different question I would ask is, we are actually calculating a reorder level, but when we discuss the formula for reorder level, are we having a reorder stock level? I don't think so. Are we having a minimum stock level and average rate of consumption? So that is something you need to check with yourselves. I think what I can see here is easy way of approaching this one based on the information given to us is simply the maximum consumption, because we are talking about a maximum consumption is 200 kgs more than the average consumption per day. That is the clear-cut information given to us. So if I talk about the maximum consumption, guys, what do you think? What would be the maximum consumption for us? What would be the maximum consumption? I think for that, we need to calculate the average consumption. So if I want to calculate my average consumption, we are looking at 194,400. This is given to us for annual. And if we assume 360 days in a year, what is the number we get? Average consumption, guys, per day, 194,400 divided by 360, I guess. So we're getting 540 units. We're talking about 540 units here. Now, we are talking about maximum consumption given to us 200 more than the average one. So 540 plus 200 is 740 then. So we got the maximum consumption, and the formula for reorder level is maximum consumption into maximum lead time. And there you go, we get a maximum lead time of 8 days. That means for a reorder level, using the maximum consumption and maximum lead time, we are looking at a 740 into 8 here, which is a 5920. We are looking at a 5920 of a reorder level. Done absolutely perfect. People on the query panel, is it clear, guys? The first 2 points are clear to everyone? Perfect. Bhumika, thanks. Preeti, thanks, Sayanto. Okay. So the last part of this question is maximum stock level, guys. Remember the maximum stock level formula. And as I said, these are the formulas you need to know, pretty much frequently tested. So ROL plus reorder quantity, I think we calculate both of them if I'm not wrong. We calculate both of them, right? So that means the first couple of calculations will help us to arrive at the third answer if we are careful, if we know our formulas well here. So we are looking at the maximum stock level, means we need to understand, first of all, what will be my minimum consumption though for the maximum stock level, because the formula tells us, what is the formula tells us, guys? ROL plus reorder quantity, that is ROL plus EOQ, ROL plus EOQ minus minimum consumption rate into minimum reorder period. The problem is, do we know the minimum consumption? Any inputs, any hints from anyone? How do we go about with the minimum consumption here? I'm stuck. I need your help here. How to see who can help me here? The formula here, if I want to quickly write down, tells us ROL plus EOQ. We're looking at a minimum consumption into minimum lead time. How do we calculate the minimum consumption? That is the call here. Anyone who'd like to apply some logic? Thought, I thought we got the average consumption right on the top, 540 units. Yes or no? And if we were to understand, then say 740 into minimum days. Then 740 was what? 740 was maximum, right? And as I'm asking you the minimum, right? So can I say, you guys can probably agree or disagree with me. Can I say maximum plus minimum divided by 2 should be your average? So we calculated 740. Minimum we need to calculate upon 2 is what we are looking at, 540 here. It's a simple trick. It's a simple trick. So minimum would be, based on this, 540 into 2 minus 740 here. Preeti said it should be 340. Preeti, I hope this is the way you calculated, right? So minimum is 340 in this case. Guys, I hope it is clear, everyone. Then I think you missed out the 2. I think it should be 340. So that means we are ready with a formula, right? We are saying that, okay, reorder level. We are saying a reorder level here. Preeti has already calculated that in terms of the maximum stock level. So we are calculating the reorder level in the terms of 5920. EOQ we all calculate 1800. And then we are talking about 340 into 4. So we are saying 5920 plus 1800 minus 1360. What do you think, guys? What is the number we are getting? We are getting 6360, I guess. 5920 plus 1800. Getting 6360. Everyone getting 6360. Preeti, Ardhan, yes, perfect. Okay, this is again a type of question, guys, which have been tested in your previous exams, previous papers, past year papers. I'm sure you guys will practice all the questions. Uh, Lastly, I would like to quickly go through something. Absolutely, Sayanto. Lastly, I would like to go through something which is called as a case scenario, where you will be given a case scenario and there will be questions on the basis of it. So 4 or 5 questions based on a case scenario. So I would like to spend, I know it's almost time, but I would like to just showcase. We may not be solving all of them, but at least you should have an idea what kind of a case scenarios you may be getting here. I hope you can see a question on my screen, which says a procurement committee of Zebra Limited has been entrusted to review the material procurement policy. Company at present procures a single product X by using, so we're talking about produces a single product X using two materials P and Q in the ratio of 3:2. P is perishable, has to be used within 10 days, and from the goods received no date. And material Q is durable. So P is perishable here and Q is durable. Can be used even after 1 year. Material P is purchased from the local market within 1 to 2 days. Material Q is purchased from neighboring state. It takes 2 to 4 days for material Q. Purchase price is given 30 per unit and 44. To place an order, the company has to incur an administrative cost of 1200. Carrying cost of P and Q is 15% and 5%. At present, material P is purchased in a lot of 15,000 kgs to avail 10% discount. GST for both the materials is 18% and input tax credit is available. I think we discussed this today. You know that if input tax credit is available, you may not include that in the cost. Sales department is provided an estimate that company could sell 30,000 kg in January 24 and also projected the same for entire year trend. And look at this important information. Ratio of the input and output is 5:3. Company works 25 days in a month and production is carried out evenly. So this is the information you should keep handy and kind of a case study which can be given to you in the exam. Based on this information, there could be some questions. I can probably show you a couple of them. If you want to participate in this right now, I would request you guys to take a snapshot of this information. I will go to the next slide and you can take a look at this details at all the times of your convenience. So we are looking at a lot of information given to us. Based on this, there will be questions. So let's see a sample question here. Question first is, and I will come back to the facts, guys. For the month of January 24, what would be the quantity of materials to be requisitioned for both material P and Q? Question is very simple. What would be the quantity of materials to be requisitioned for both material P and Q? What do you think, guys? What's happening here? We are talking about requisition. If I want to ask you quickly, On what basis the requisition would be important or requisition would be relevant? I think based on the production. So if these are the facts, and I'm asking you, what would be the material to be requisitioned for P and Q? What would be your approach? Any thoughts? Facts are in front of you. I want you to think logically. I can give you a hint. I can help you, of course. Guys, there is two important information. Right? We are talking about requisition based on the production. Preeti has already come up with the answer 18,000, 12,000. Superb. How did Preeti get that? Let me try to guess. And Preeti, you can let me know if that was your approach or not. So company, they're given an idea that you are talking about 30,000 kg, right? You talk about 30,000 kg and a ratio of input and output is 5 is to 3 here. 5 is to 3 here. Ratio of input and output is 5 is to 3. So how do we go about this, guys? In terms of a monthly production is 30,000, then what is the raw material required? What is the raw material required, guys? Remember we discussed the productivity ratios. We discussed the productivity ratios. Tell me, guys, what happened here? We'll see to that though, whether we are looking at 18,000 and 12,000 respectively. Preeti, what is your thought? How do we arrive at this? How did you arrive at this? Did you miss out the ratio actually, or did you just simply apply the okay? Abdan says a material could be required of is 50,000 for a 30,000 output. Okay, Preeti says she missed out the ratio. No worries. So we are all learning here, right? So we are all learning here, and that's what becomes very, very important for us in terms of what should be our answers here. So in terms of our approach to this particular question, we need to understand the productivity ratio. And when I'm saying productivity ratio, guys, we are talking about a monthly production of 30,000. That means the input would be based on that is 50,000 here. So 50,000. So if you talk about input upon output is 5 is to 3. So 50,000 divided by 30,000 is gives us 5 is to 3 here. So if I talk about 50,000, if I talk about 50,000 and then we see the ratio that the input is between in the ratio of 3 is to 2. So that means if I understand the total consumption is 50,000, that has to be divided into 3 is to 2. The answer becomes 30,000 and 20,000. That means answer becomes D here. Initial thought, probably if you miss out that input output ratio could lead to your answer B also. But I hope it is clear now. Preeti, everyone else, Tamanna, everyone else, guys, on the query panel, everyone is clear now. Similarly, based on the facts given to us in the question, guys, next question. So I'm not solving it here right now. You guys can do that later on. But I'm just showing you how the case scenario becomes relevant. So next question is basically economic order quantity. That's just simply applying the formula based on the numbers given to you guys. Uh, we are also looking at few more questions here, like what should be the maximum stock level for a material P here? What should be the maximum stock level for material P? So of course, for this also we need to do some calculation, what we did in the last question here. For that, we would be needing, we're calculating the maximum stock level. The formula, remember, is reorder level plus EOQ minus minimum consumption and minimum lead time. Now, in terms of the reorder quantity, we are already aware from the details of the question, there is a point mentioned that at present, material P is purchased in a lot of 15,000 kgs. So we are already given the reorder quantity to avail that discount. So the reorder quantity is given to us 15,000. Reorder level, we can all calculate based on the given information of maximum consumption and maximum lead time, and then accordingly the maximum stock levels. So guys, I think for attempting these questions, it becomes very important that you guys have hands on the formulas. Is everyone with me on this? Attempting all these questions, the first imperative point is that you need to have a practice on the formulas. Unless you don't have, you cannot apply that. That's one prerequisite. Second, if you talk about similar case scenarios, how to approach these case scenarios where you can go wrong. Like the biggest example was the question number one, where you missed out an important piece of information, right? You guys gave an answer of 18,000, 12,000. So I think for the case scenario, my words of advice for everyone here is probably you can note down a given relevant information in your answer sheet so that you have the requisite information in front of you while attacking each part of that MCQ. So like we used to do in a detailed question, right? Given information is noted down and then you do your workings. I'm sure a lot of you have that practice already. I think that practice can help you in attempting these ones, guys. If you note down your given information so that you do not miss out any critical piece, then when you attack individual part of the MCQ, you can at least understand what all information is required from the given. Is there any working you need to do? Is there any working note to be done? So that you can do that. For example, the last question on the next screen. You're talking about calculate saving or loss in the material P if the purchase order quantity is equal to EOQ. So what that question is indirectly asking us, if we need to understand that requirement, that question is indirectly asking us that what if we calculate EOQ first and that is my purchase quantity? That means last question is asking me two things here. A, I have to calculate economic order quantity. And mind you, if that EOQ is less than 15,000 units, you will be losing the discount. You'll be losing the discount because the question gave you that you are purchasing 15,000 kg for a 10% discount. So if that your purchase quantity becomes less because of the EOQ parameters, you're losing the discount, and then what will be your cost then? So it's a very, very interesting question where we're talking about the last one. By the way, this is pretty much drawn from your RTPs, guys. You can go ahead and look at them later on, your revision test papers or your case study scenarios. You can go ahead and see that later on the Board of Studies portal. But I think this should give you a good enough exposure of how to attack case scenarios. So with that, I would like to definitely recapitulate whatever we discussed today with respect to the material cost. We kind of covered almost everything. I think the one part towards the end of your study material, which you can touch base, which is with respect to the normal and abnormal loss, which I anyways covered at the beginning. You know, what happens to the waste, scrap, how do we take into account normal units, abnormal units, which I discussed at the overview level. So make sure you do that, guys. And I think we would want these sessions to be more interactive. Many of you were interactive today, but I request you guys to kind of be continuously asking your questions wherever you are stuck. So before we end, guys, last request from me another time. Any questions, please let me know from the entire session on the material cost. Any questions, guys, from anyone, either here or on the query panel? Okay, Preeti, just give me a second. Preeti wanted a screenshot for the case scenario. Sure. Preeti, anyways, this is drawn from the RTP, but yes, I will just quickly go to the slide again. You can take a screenshot now. Anyone else, guys, wanted to ask any question with respect to any discussion point, any concept which is not clear? If you have any questions later on, of course, you guys can definitely email to us. But any questions, let me know now. Preeti, in case you wanted to look at the questions also, we have already discussed a couple of them just for a reference, showing the next two slides as well. And by the way, this entire presentation is also uploaded for your reference. You guys can download from there as well, right? So I believe that's it for the day then. So thank you all for joining in. Pretty sure you are enjoying these sessions, and we will have a good fun round together. We will be meeting now on Thursday for labor cost. And my humble request is, before you come to the session, have a glance to the book so that we can do some more practice on that date, so that you guys are pretty much aware of the concept already. So keep on doing the hard work. Remember, there are three shortcuts to the success: practice, practice, and practice. So there is no shortcut to success. You keep on working hard. So take care, guys. See you soon. Wishing you all very best of luck. Thank you all. Have a nice day. Cheers.
Thank you, sir.
Someone said something? Yeah, yeah. Anyone? Most welcome.
Thank you, sir. Have a nice day.
You too. Hey,
Thank you, sir. Have a nice day.
you too, guys.